What if I told you there is a government program that lets you buy a home with $0 down, no private mortgage insurance, and it works 20 minutes outside of Chicago, Houston, Atlanta, and Dallas? And 90% of Americans who could use it don't even know it exists. Not because they don't qualify, not because the money ran out, because every single person who benefits from you not knowing, the bank, the mortgage broker, the real estate agent collecting their commission on a bigger loan, has absolutely no reason to tell you. And this channel exists for one reason: to give you the strategies that $400 an hour advisors share behind closed doors. And today, I'm going to tell you everything about the USDA home loan, what it is, who qualifies, how to use it in the suburbs, and how it saves the average family almost $10,000 on the very day they close. Stay with me, because by the end of this video, you will never need to watch another video on this topic again. I am giving you the real numbers, the exact steps, and the specific websites to use tonight. If you are new here, this channel is built on one promise: real strategies, real numbers, no fluff. If that is what you are looking for, hit subscribe right now. Because this video is number 2 in a 9-part series, and each video builds on the last, you do not want to miss what is coming. Here is the misconception that kills this opportunity for millions of families every single year. People hear USDA loan and they picture a barn. They picture a cornfield. They picture a property so far from civilization that you need a pickup truck and a prayer just to get your mail. I am here to tell you that image is completely, entirely, 100% wrong. The USDA Rural Development Guaranteed Loan covers any community with a population under 35,000 people. 35,000. Do you know how many suburbs sit inside that number? Towns 20, 25, 30 minutes outside of every major American city? Towns with Starbucks and Target and 2-car garages and good school districts. There are USDA eligible addresses less than 25 miles from downtown Houston, less than 30 miles from Atlanta, and in Illinois, communities 40 minutes from the Chicago Loop that fully qualify. Let me show you exactly what this means in dollars, because this is where it gets genuinely shocking. Let us say you are buying a $280,000 home. That is roughly the national median for a suburban home within USDA eligible distance of a major city. If you go FHA, which is what most first-time buyers are pushed toward, here is what happens. You put 3.5% down. That is $9,800 out of your pocket on day one. Then you pay 1.75% upfront mortgage insurance. That is another $4,900 at closing. Then you pay an annual mortgage insurance premium of 0.55%. That is $1,540 per year, every year, for the life of the loan. Now here is the USDA version. Same $280,000 home, $0 down. Not 3.5%, not 1%, 0. No upfront mortgage insurance, and an annual fee of only 0.35%. That is $980 per year compared to $1,540. And that fee disappears after your loan balance drops below 80% of the home's value. On day one, before you unpack a single box, the USDA loan saves you $14,700 compared to FHA. And every single year after that, you are paying $560 less in insurance fees. That money is yours. To invest, to save, to put toward your children's future. Here are the exact steps. I am going to give you 5, and I am going to give them to you fast because I respect your time and you are ready for the information. Step 1. Check your address. Tonight, go to eligibility.sc.egov.usda.gov. You type in any address. If the map shades it white, you are eligible. If it is shaded gray, not eligible. It takes 30 seconds. I want you to check 3 addresses: your current rental, your parents' neighborhood, and one suburb you have always considered but thought was too far. You will be surprised. Step 2. Check the income limit for your county. This is the part where people assume they earn too much, and they are almost always wrong. A family of 4 qualifies up to $110,650 in most counties. In higher cost of living areas, that limit climbs to $160,000. You find this number at rd.usda.gov, the same site where you find approved lenders. Step 3, and this one matters more than most people realize. Find a USDA-approved lender. Not just any lender, not your bank, not the mortgage company that keeps sending you flyers. A specifically USDA-approved lender. Because not every institution processes these loans, and an inexperienced lender can accidentally disqualify you through paperwork errors that have nothing to do with your finances. Step 4. Ask the seller to cover your closing costs. Here is what almost no buyer knows. With a USDA loan, because you are bringing $0 to the down payment, you can negotiate with the seller to pay 3 to 6% of the purchase price toward your closing costs. On a $280,000 home, that is $8,400 coming back to you at the closing table. It is entirely legal. Sellers agree because the alternative is their home sitting empty. Step 5. Stack it. The USDA loan is powerful on its own, but here is what the top financial advisors know. USDA loans are compatible with many state and local first-time buyer assistance programs, which means in some counties, a qualified family can close on a home with the USDA loan covering the purchase price, seller concessions covering closing costs, and a state grant covering any remaining gap. The net result? They close on a home and walk out of the closing with money remaining in their bank account. Here is the final thing I want you to understand, and this is the part that I think will genuinely make you angry, but in the right way. The USDA loan has existed since 1949. 75 years. It was designed specifically to help working-class and middle-class American families become homeowners. Families earning real incomes, living in real communities, who simply do not have $100,000 sitting in a savings account for a down payment. And yet, the average mortgage broker, the average bank loan officer, the average real estate agent, they push buyers toward conventional loans and FHA loans every single day. Not always because USDA is worse for you, but because a bigger loan means a bigger commission. And a program that requires $0 down is not in the financial interest of the institutions that profit from your down payment. So here is what I need you to do right now. Check your address at the eligibility site. Write down your household income and compare it to your county's limit. And then find one USDA-approved lender and have a 15-minute conversation. That is it, 15 minutes, and you will know whether this program changes your path to homeownership entirely. Share this video with one person in your life who is thinking about buying a home. Not because it helps this channel, but because the information you just received is information your bank will never give them, and they deserve to know it exists. And if you think what you just learned was powerful, video 3 of this series is going to be the one people talk about, because I am going to show you a completely legal IRS rule that allows a married couple to sell their home and pocket up to $500,000 completely tax-free. And here is what makes it extraordinary. You can repeat it every 2 years, legally, repeatedly. Almost nobody is doing this. I will see you there. If you are not subscribed yet, this is the moment, because the next 7 videos in this series are going to give you a complete financial education that most people pay thousands of dollars to receive. It is free, it is here, and it is waiting for you.